Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, August 9th, 2024. It's 1:58 p.m. Eastern Time as I'm starting the video. And this is a follow-up to the previous video. I'm going to probably just post these both together as that other video I recorded today was uploading. I figured I'd pull up the VIX chart. I made mention, as I have quite a bit recently, that the VIX typically peaks first, and that's also not just kind of hindsight stuff where you can look back and say it peaked, but as you see the VIX falling, especially falling sharply, and then stocks still going down, that's often a tell. However, you always want to confirm it. You know, I would never go long, cover shorts on, on a big downtrend bear market if there wasn't technical evidence to do that too. In other words, I wouldn't solely just because the VIX is down for a day or two with the stock market still falling. You'd want to make a case. So I'm going to just show you real quick, talk about that last big spike, because this is the biggest spike in decades here, really, other than, match the end of the bear market in '07. So in modern history of the financial markets, we've only seen the VIX spike to this level twice. Again, that was during the financial crisis, down into the lows before that bear market ended. And then when COVID hit, which was will go down in history as one of the most unusual periods in the stock market. Well, only time in history the world has shut down, literally the world economy shut down from the pandemic. So, all right, real quick, this will be quick. All right, so we're going to zoom in here. We'll take it down to a daily chart. There's the peak right there, but we'll go down to a daily so we can look at the exact day that the VIX peaked. And so I'm going to pull it in real tight. Let me just, we'll leave it. We'll leave the lines up for now, the annotations. But we'll come in real nice and tight here. We'll zoom in so we can really see what was going on back then. And there it is. So we have the VIX peaking. Let's see, the high there was 84.83. The next day it was 85.47. So that's the day, the high, March 18th, 2020. And then you can see the VIX falling from there. So March 18th, 2020. If only, there was a way to know, as everybody thought the world was coming to an end and the stock market was headed towards, zero or oblivion, even though S&P was down, ended up bottoming shortly after that, 36%, I think it was. But let's take a look at this. Okay, so we go back to March 18th, 2020. And I was started after being short almost the entire drop of COVID from the highs, which again, I've talked about this many times in the past. The technicals, the same ones I use often, negative divergences, trendline breaks that got us in early. So there was a bear market priced in, or a big correction anyways, and COVID, call it what you want, call it a black swan, I will, but it just was simply the catalyst for a technical drop that was already being priced into the markets. And right around that time, remember the market bottomed a few days later, but I started getting bullish and throwing out bullish setups. So I'm talking about a bear trap scenario in play, covered in these videos, bear trap rally, even giving you price targets here on the 19th right there, showing you these charts here that based on, again, so the takeaway here, guys, isn't to boast, hey, we were long, bottom, short at the top. Honest to God, I don't think there's a bear market top or bottom or major correction that I've missed in decades. And yeah, there's, whole broken clock thing. There's several that I thought were going to be a top, or, not many on a bottom, but several tops. And I always said they were potential, and we had to then, after triggering the short-term sell signals, we needed additional ones that never followed, and I'm speaking mainly over the last year. But this was March 19th. Looking at the bottom, giving you some near-term targets. Again, this is on this 30. You can see up there, this is just 30-minute charts right here we're looking at, with the small, mid, and large caps, all of them. And then just a few days later, when was this post? This was on the 23rd, which I believe was the actual day of the bottom, because I'll get to that in a second. It's kept on it. It was pretty clear. No change in the technical posture of the indexes. Still looking for, these bottoms here. And we did have from that 18th trade, we went up and we hit the first target, which was my trend line. On these are all those charts from that day. First targets were hit on the 18th. We got the first bounce. They went on, made a marginal, ever so slightly low, and again, that was the 23rd on the update. And then if you go back to the charts, you can see here the VIX. So there it is. So the VIX peaked on the 18th, as I just covered. By the 23rd, it had clearly been moving lower, but that's when the stock market peaked. That was right here. You can see this is where we started going long right here. Reiterated those longs, no change in the technical posture on the day of the low right there on the 23rd of March. And so there's again, guys, just a takeaway of how to use the VIX in conjunction with the charts of the indexes. Again, I will never go long, QQ or anything if I can't make a case based on its own technicals, which we did here at the time for the S&P 500, the small caps, the large caps, everything. And of course, as time went on, those charts continued to firm up, and seemingly little what I call innocuous bullish divergences on a 30-minute chart, plus everything else I mentioned. I talked about a bear trap scenario, and bear traps are explosive. That's not just, when you're trading in a trend, you're active swing trading, you can use 15, 30, 60-minute charts to game little, swing moves, swing trading. That's what those are good for. But when you're talking bear trap, bull trap, those are the big ones, and that have a lot of powder. It's like dry powder because you get all the shorts and piling in. Johnny-come-lately shorts, COVID hit, and then you have that explosive rally. Given what the extra fuel was certainly added there with the excessive stimulus from both the federal and federal government as well as the Federal Reserve, but that at least got us where other people were most likely wanting to short the market there. We were covering our shorts and going long, and that's it. And that's pretty much it. And fast forward to today. You had the same thing in reverse, an excessive hot air. You had a what'll probably prove to be blow off top. You had the bearish engulfing candle, a lot of excessiveness here. And so I'm trying to nav this down, and the takeaway is the reason for the follow-up video. I just wanted to say, as I said in the previous video, but then cite a hard example instead of just saying, trust me, I've noticed the VIX peaks and before the market often show you that's the case. And we can go back in time and time again if I wanted to pull up other ones. But right now, like I said, the evidence to me, it just doesn't, I don't see a lot of evidence in the bottom that this correction's over. That this, in other words, that this tag of the 200 days is going to have the same net result or follow-up result as this tag where we did this. I don't see that. Like I said, I see more something along like that or this. All right, guys, I'll get it out to you. This is a short 8-minute follow-up video, and I'll follow up with, you'll get them both together in one post. This has been Randy Finney with Right Side of the Chart. Have a great day.